All right, everyone, welcome back to the channel. This is the final few days of 2025. Uh, we are going from Sunday tomorrow, which is December 28th, and we are going to be going straight into January 2nd, which is going to be Friday. So it's going to be a very interesting trading week as we finish up the final few days and go straight into the new year. So before we begin, let's just pray. God, we just give you thanks and praise again for taking us to the final trading week of 2025. It has been a challenging year for some. It's been a very enlightening year for others. But thank you so much that we all learned together. Pray that you'll be the anyone watching this video. May we continue to be successful as we learn the concepts, and may we finally learn to be a little bit more consistent as we move into 2026. Thank you again for your blessing and your goodness. We pray. Amen. All right, guys. Very interesting, last couple of days for 2025. But as you know, nothing has changed in my approach to how I see the markets on the US30. The market, like I've been saying for years, is 100% bullish, which means that I take only my buys from my largest higher lows. Now, let me clarify. Because the market is bullish, it does not mean that sells do not exist. All it simply means is that any sells that you see on the market is only going to be a temporary retracement to create the next largest higher low. Okay? Those of you who are watching this video for the first time, I would also encourage you to pause this video, go back, and look at the review video that I did for last week as it related to the analysis video that I posted for last week. Okay, so you have to watch these videos in sequence. Okay, there's the review of the current week or the past week, and then there's the analysis for the upcoming week. All right, now those of you again who are new to this method, new to my channel, let me just categorically say, I don't sell anything. I don't offer any courses. I do not offer any kind of subscriptions. All this material that I'm posting here is just the way that I've observed the market over the past number of years and what I have come to determine based on my strategy and based on my analysis and back testing. So these blue lines that you see here are the blue lines that show you my weekly boundaries. And of course, the green lines are what shows you my daily boundaries. So that way I'm able to ascertain different moves that the market actually produces so that I'm able to respond and I'm able to plan my strategy accordingly. All right. So with that being said, a couple of things. Last week, we saw again the market respecting strategy, which of course is higher lows to higher highs. But you may say, well, an all-time high wasn't broken. How do you get higher lows to higher highs? Well, one thing you have to understand is that your analysis needs to start from your largest time frame. So if we go on our monthly time frame, for example, which most traders ignore, if you look at your monthly time frame, you see that your monthly time frame is making nothing but higher lows to higher highs. Okay, so that's clear right there. Okay, higher lows to higher highs. Now, when you go to your weekly, you'll see that your weekly is also at a higher low. Okay, sorry, a higher high. All right, and it's coming from a higher low. You may see the word low here, and you may say, well, hey, this is a new low. This is not a higher low. Well, guess what? It's higher than the previous lows. Okay, it broke this one. That's why it actually put on a new low, but it's still higher than all of these other highs before it. Okay, you go to your daily, you'll see the same thing. playing out. Market is currently at an all-time high. That's where it's trading from. It's coming from a higher low. Okay. You go to your 23-hour. Okay. Market is coming from a higher high, which is an all-time high. Okay. And it's coming from a higher low. Now, after that, you saw that it made a series of consolidated points, which is higher lows to lower highs. All right. Now, you go down to, let's say, your 4-hour. And on your 4-hour, you see what's happening here. You see a perfect W forming right here. But the difference between this with this W that you're seeing on the 4-hour is that this W did not need to complete another all-time high right now. It's actually showing you a lower high in relation to this previous all-time high, which was reflected on the 4-hour as a higher high. Okay, so you're seeing that consolidation that we're seeing on the 23-hour playing out in real time on your 4-hour time frame by the fact that it's moving from a higher low and it's actually consolidating with a lower high, consolidating between these 2 points right here, which we have a low and a high on your 2-hour time frame. So quickly, let's jump to that. So your 2-hour time frame, this is the last low right here, last high. Although it says lower low, it's still a low. Okay, 3 types of lows: low, higher low, lower low. All right, so it's still coming from a low to a high, which is the all-time high. And every other price point has happened in between these 2 points. So that's how you get that consolidation that we're seeing on the markets right now. Okay, what am I expecting for this upcoming week? That's the million-dollar question. All right, a couple of things. You'll notice that I've gone ahead and left all my targets in place. These targets I've posted for like the past 3 weeks. I've left these targets in place right now. Okay. The reason is I know that they're going to get broken. There's no question about that. Okay. The level of consolidation and level of retracement that we'll see before these targets are hit, that depends on what you see on some of your smaller time frames. Okay. Because remember, the market has to retrace to create that higher low in order for it to go and make the next higher high. Every higher high that you see on the market stems from a higher low. Okay? Once you see HH on the market, it is coming from a higher low. So you can't have a low straight to a higher high. So you can't have a low, new low, straight to a HH. Never happens, never will happen, cannot happen. You must have a higher low before you can have an HH, higher high. Okay? So the market needs to retrace. That level of retracement needs to be seen before you can expect the market to continue to go and make the next higher high. All right. So you may say, well, but on Friday, the market actually finished at a higher low here on the 2-hour. What's to stop it from completely going up here and shooting above? Hey, you know what? If that happens, all the merrier. Analysis was right 100%. Okay? But remember this. Market ended. Okay? The session ended on Friday. What that means was your weekly candle, let's pull that up here. Your weekly candle would have expired on Friday. Okay? Your weekly candle expired on Friday. Okay? Your daily candle expired on Friday also. Okay? Every other candle below your weekly candle expired at 4:59 on Friday. So, which means anything that failed to register a new high and registered only a lower high, that's an exhaustion point. Okay? So if the market tried to go up to create a higher high, which here on the 23-hour, it tried to do, but failed, okay, what you're now going to see is that you're going to need to see some amount of retracement before the market continues. This is not a reversal. Consolidation does not mean reversal. Consolidation just means, hey, if we fail to make the higher high, we're going to go back and we're going to try again from the largest higher low. So that's all that we're looking for this week. Okay, price failed to do that last week. All of last week, it failed to do that. Okay, so we're expecting to see some amount of retracement before the market actually continues. And that is why these targets are still intact. So I have TP1, which is the previous all-time high. Then I have TP2, which is going to be at the minus 27%. And then I'm going to have TP3, which is going to be at the minus 61.8%. All right. All of those targets are going to get hit. The important thing, though, is that you have to make sure that you're going after these targets armed with the support that the largest higher low gives you. You can't expect to reach these levels without support from the higher low. All right. It's not going to happen. All right, so let's jump to the 2-hour. Let's look at what's happening right here. So on Friday, you'll notice 2-hour did not signal anything up here. Okay, rejection. Now, the important thing to note, okay, is that you should always look left to see what's going on. Remember, the last point that was hit, the last all-time high, happened 2 weeks ago. Okay, this happened on Friday, December 12th. This was the all-time high, the new all-time high that was hit. Price came down, made a higher low on the H23. Price came back up. Instead of breaking to make a higher high on the 23-hour, it made a higher high on the 2-hour, but only a lower high on the 23-hour. And that was an overbought lower high. Okay. So you had that exhaustion, and then you had that overbought lower high, which tells me that I'm still expecting to see some amount of retracement to find that support that I'm looking for before continuing to break the next all-time high. All right, so that's what that tells me. Now, if you look at your 1 hour, same scenario. You had a segmented low, price tried to go up, but instead of going up, it got some exhaustion right here. Now, another thing that has me concerned from the fact that, okay, I'm not going to jump in arbitrarily and just take a buy, okay, is the fact that if you look at structure coming all the way up, is making higher lows, higher highs at some point in time, okay, all right, but what you would have noticed is the fact that when it made this higher high, it came down to make a higher low. It went back down and it made a lower, sorry, it went back up to make a lower high before forming a new low. That's a break or interruption in structure. Some people call it a break in structure. I don't necessarily call it a break in structure until I have my 2 confirmations. So it's an interruption in structure. All right, so here you had a full structure, low to high, higher low, higher high, complete structure move right here. So for the continuation, you need to have higher lows, then higher highs, okay, which means that it would break this previous all-time high to produce another higher high. But instead you had low to high, higher low, higher high, structure, higher low, lower high, interruption in structure, and then now you have a new low. Okay, but this new low still does not tell me that, oh yes, structure is going to be broken. It doesn't tell me that. Okay, it tells me that there's an interruption, but remember, as we have seen in the past, this new low can go straight up. Okay, so the market can open and you can have a huge gap towards the upside to produce that new high, which basically breaks everything, you know, all the previous all-time highs, all right, to produce this new high. You can see that. Or what you can see is market consolidating, pushing up, making another lower high, okay, then coming back down to make a lower low. If that happens, that's a confirmation that the 1 hour is now in a bearish momentum in order to retrace to create that new higher low on your larger time frame. All right. So I don't want you guys to miss that at all. Okay, I know this video is going to be lengthy, but I want to make sure that we understand the concept, or you guys understand the concept of where my thought process is. Okay, so the other thing that I want to point out is here is your last structure. This was your last higher low and your all-time high, which was a higher high. Don't believe me? Let's mark it and check it. So I'll circle this point right here. And then I'm going to circle this point right here. And then I'm going to draw a line from here all the way. Oh, sorry. Then we're going to draw a line from where it, yeah. I'm going to draw a line from here to here. Okay? Just so we can see what's going on. Okay? Higher lows to higher highs. All right? Let's look at the larger time frames. Here we go. This was a lower low. This was a higher low and a higher high. Right here. We didn't have to look far. Didn't have to look far. Here we are in the 3 hour. Higher lows, higher highs. This was the last structure move. Higher lows to higher highs. Okay? Let's look at the 23 hour. 23 hour didn't have anything on right here. Why? Because it was coming from this low, and you basically had a midpoint or upper level consolidation to produce this higher low on one of the smaller time frames. Okay, to complete the high, the new high on your 23 hour, which is your higher high on your 3 hour, your 4 hour, and all those other time frames. All right, so here we go. 3 hour, also on your 4 hour. All right, same thing. Higher lows, higher highs, right there. Okay, so that is what I'm actually mentioning to you. You need to see that higher low to higher high. Okay, completed once you take your largest higher low. All right. So your largest higher low, and I mean, let's play devil's advocate. Let's go up the line. Let's look at your 11 hour. Here we go. Higher low, higher high. Why is this still a higher low, although it says new high? Well, if you look at what happened, it broke every single previous high. And if you've been following me, you've always heard me say every single high on the US30 and on the NASDAQ 100 will get broken. Case in point, high, broken. Previous higher high, previous all-time high, broken. New all-time high, new high. There you go. Higher lows, higher highs. All right. Let's go back down and I get rid of all of these right here. So we have clean charts to work with. All right. So this is where we're at right here. Let me take this out. Yeah. So this is where we are for this week. So this was the zone. Price consolidating towards the downside. Now let's use our lines. Okay. There goes a trend line. There goes another trend line. Come on. There goes another trend line. Okay. Here goes that channel going down. So if you notice, consolidation, sorry, the zone, which is the low to high. Okay. Then you had this channel. Okay. Lower highs, lower lows. This is on the 2-hour time frame. Lower highs, lower lows. But it was still within this range right here. Okay. So here we go. This range right here. This price was consolidating in between that range right there. Okay. Then look at what happened. It made a low this week. Okay. Or this in this particular week. Then look at what happened last week. Even in a short week. Continuation of the Santa rally. So you had right there, and you had your upper trend line right there. So if you notice, this is what you call a V-shaped recovery, so to speak. Okay, so the price is definitely trying to recover. So you have that V formation right there. Okay, consolidated towards the downside, consolidated towards the upside. Nonetheless, it's still a consolidation within this larger range over here. All right, let's get these out. All right. That was the recovery. Let's get this out here. All right. So here we go. So for this week, what I'm expecting. So again, here we have it. We have this lower high to new low. So I'm expecting that the market is in some amount of retracement. Now, let's look at the grand scheme of things. So if we go back to our 2-hour, and if I go back to this last movement and I pull out my fibs, which of course, the expansion levels that I have for my fibs, for my take profits, were actually derived from these fibs. It's not drawn specifically to scale, but you'll see previous all-time high, which is my 0%, TP1, minus 27%, TP2. Excuse me, minus 61.8, TP3. My zone of interest, it's the third week that my zone of interest is still in play. Okay. Will the price get down here? That remains to be seen. Okay. However, it is still my zone of interest because of this level of consolidation that I'm seeing for the past 2 weeks. Right here. This level of consolidation right here. Okay. This is what I'm seeing right here. Okay. And I'm still hesitant to go full force into my buys because I'm expecting to see some amount of retracement to create that higher low on my larger time frame. Okay. The market is heavily consolidated. When you see this move right here, that tells you that the market is heavily consolidated. All right. Now, I want to try something cleaner. Let's see if we can do this. And like I said, I like TradingView because TradingView provides so many different tools that you can utilize in your analysis. So the triangle tool. So here we go. Triangle tool. So we go from this high to this low point right here, back to this high point right here. Okay. What am I seeing? Well, a couple of things. Notice prices tipping in this triangle right here. The highs are forming lower, okay? But they're tipping inside this triangle range right here. And they're ending outside of the triangle right here with the lowest point, okay? Now on the upside, price again is tipping in the triangle, but also tipping outside of the triangle. However, look at what it did. The high, although it's a higher high, it's only higher than these highs down here, but it still fell short of the all-time high. So it created this triangle, which tells you that the price is actually going towards the downside, okay, for that retracement. So because it finished outside of that triangle right now, okay, I'm expecting to see some amount of retracement, which could actually lead me right down here to my 78.6% retracement. Not uncommon. Looking at my fibs, remember, the NASDAQ 100 likes to retrace to either the 61.8 or the 78.6 retracement level. All right. That right there is important to note. Okay. This triangle right here tells a very interesting story. The price is basically consolidating in a V. 1 minute, it was consolidating towards the bears. Next week, which was last week, Christmas week, it was consolidating towards the bulls. Structure still has not broken back towards the upside. Okay. When I say structure, I mean temporary structure. Still has not broken towards the upside. Okay, it's consolidating within range. Remember, your range, as your fibs will tell you, 0% is your previous all-time high, 100% is your lower low. Price is consolidating in between these 2 points. Okay, so if the retracement comes on and you get to my zone of interest right here, okay, then that tells me that the price is still making higher lows on my larger time frames, and then it is time for me to consider my buys. All right. Hope that that is clear right there. Let me get this off. Let me get my, let me see if I'll take my fibs off right now. I have something else I want to mention to you guys. Okay. So from here, you're looking at your higher lows all the way up to now breaking 1, 2, and 3 points all the way to the top right there. All right. Now, the other thing that I want to mention before I actually take my leave on this video is the fact that when you look at your retracement points also, yes, whenever you're taking a buy, okay, whenever you're taking a buy, remember this rule. If the price is at a high, you cannot buy from a high position, okay? Cannot buy from a high position. And that's why you always need to look at your larger time frames. So you may look at this and you may say, well, my 2 hour is at a higher low. I should be able to buy from here. Yes, you should be able to buy from here. But at the same time, have you checked your 3 hour and your 4 hour? If you look at your 3 hour is still at a high position. Are you supposed to be buying from a high position? Absolutely not. Same thing with the 4 hour. So every single time frame larger than the 2 hour time frame is still sitting at a high position. So don't rush your buys. Wait patiently for your buys to form by creating that support, which is the higher low that you're looking for. So I'm not rushing to get into any buys right now. It's the beginning of the week. And remember, Mondays, Tuesdays, sometimes Wednesdays are always the days when the market takes to consolidate, retrace, and set up the largest or to set up for the move of the week. There's no rush, guys. Absolutely no rush at all. So price is here, not looking to buy from here. Sorry, not interested in a buy. I'm patiently waiting. I need to see the price come down. This is really where my ultimate buy position is going to be at. This is where it's at. If the market gives me confirmation by creating lows higher, I'll take them. But for right now, I'm not interested in a buy right here. Price is too high for me to actually get it. And it doesn't hurt. It doesn't hurt for me to wait. The longer I wait is the bigger my profits are going to be. So no need for me to rush into these trades right now. Price is too high. Okay, look at where price is coming from to get to here. Okay, well, why wouldn't I wait? Well, let's look left. Look at where price was coming from. Price went up here. Okay, if I got in for a buy right here, yes, and I've got my lower high, take my profit. Okay, yes, gotten in here, take my profit, waited. But if you notice, guess what? I sat here, look at where price came. Came all the way back down here before I started buying again. So it's all about patience. It's all about understanding what the market is doing. It's all about understanding what you need to obtain from the market. Trading is all about waiting. All right, waiting on that right setup, not rushing your setup because you feel that you have to trade and you must trade. Okay, I mentioned to you guys, analyze more than you trade. Spend more time analyzing. And I guarantee you that when you analyze more than you actually trade, you'll start to see things that you would not have seen before. All right. So that is what I'm expecting for this week. The Santa rally continues. Like I mentioned, it started all the way back here. Okay. Sorry, all the way back in December. Where are we? Yep. All the way back in December down here. That's where it started. And it has continued ever since. All right. So I'm expecting more of the Santa rally to continue. However, I'm not buying from my highs. I'm waiting for the market to retrace. Now, for those of you who understand retracements and are in sells, just remember that any sell that the NASDAQ does is only a temporary retracement to create the next higher low. So don't think that the sells are going to be long-term and they're going to be into next year and beyond. No, not going to happen. Never going to happen. Okay? Any sell that the market produces is only a temporary retracement to the next higher low. So with that being said, guys, thank you again for watching. Last couple of days for the year, trade smartly. Wait on your trades. Don't feel that you have to rush into something because you have the urge and the need to trade. You don't. Learn to wait. If you're trading a live account, stop trading your live account, get a demo account, practice it, make sure you're consistent on it for at least a month. And by consistent, I mean you're not losing trades. Once you can do that and you understand that and you can repeat the process, you are going to be 100% successful. Last thing before I go, find one thing that works 100% of the time. Do that one thing 100% of the time, and you'll be 100% successful. Thank you guys for watching. It's been a pleasure being with you all through 2025. I look forward to an even greater 2026. Continue to journal, continue to practice, continue to retest, continue to backtest, and continue to be patient. And with that being said, God, we just thank you again for a wonderful trading year. Thank you again for the ability to actually express and to expound on these concepts that will help somebody to improve on their trading journey. I ask that you'll continue to be with us, be with me, bless all our families, help us to have a wonderful Christmas season, and we look forward to an even better 2026. We thank you and we love you. Amen. All right, guys. Take care. Remember to like, share, and subscribe. And also look for me on Instagram, also on TikTok, and it's called AuberStrategy. All right. Take care, guys. Have a wonderful weekend. See you next time. Bye-bye.